All right, welcome to the Conquer Risk podcast. My name is Manish Kata. I have my business partner Jeff Goodnow here. Welcome back. I got to start this with a funny story because last week we had Christopher Norton, our video guy, director of marketing.
Manish begins here by discussing what a charming and eloquent guest host I was last week, and though flattered, it did take up quite a bit of airtime, so I thought it best to get right to the content.
So what do you want to talk about this week?
Yeah, well, so this really it comes about from a question we got from one of our good advisor partners, right? And basically, they had a small business owner, and they remembered that we had previously talked about HSAs, health savings accounts, and the ability to manage those. And that's, frankly, it's something that most advisors don't realize that that's even an option, right? You think about HSA, you just think, okay, well, it's another insurance piece, and that's all there is. So I thought it'd be good to dig into HSAs a little bit. What's good about them? Look, the point of our podcast, right? What's the point of our podcast? It's to bring unique ideas to help advisors grow and protect their business. Whether that be something as a small business owner, whether that be something as, an advisor helping an end client. And so this is, to me, one of those great, unique stories that it's worth knowing to talk to your small business clients. So that's the reason the HSAs are on topic.
And just before we dive in, an HSA essentially is nothing more than a health savings account that's attached to a high deductible plan. Now, this can get real complicated real quick with all the different nuances behind it. And obviously healthcare is a big topic, not only among business owners, but coming up with this next election as well. So what are the key points that you think are valuable for people to know?
Yeah, exactly. Well, really, I see four of them. And before we dig into those a little bit, I want to just tell you what they are. I think the four best things about HSAs are, number one, the contributions are basically about half of what a 401k contribution is. Also, if you use them properly, the earnings can be tax-free. The third thing is that, frankly, you don't unlike an FSA, there is no use it or lose it provision. So when you put money in, and that's the big difference most people don't understand, it continues to collect, hence the reason we can manage some of these, right? You can help client grow that money bigger. And then lastly, there's no RMD. So unlike an IRA, right, there's no required minimum distribution. So that's a huge benefit. If you're not using the whole amount every year, it really can start to add up. So those are the four things that I wanted to touch on, and now we can dig in a little bit.
So number one was the contribution side, right? So what exactly are the contributions, individual and family?
Yeah, sure. So basically we start in 2020, they're going up a little bit again. So singles $3,550 a year, married is $7,100. But if you think about the normal 401k type maximum, that's a pretty good chunk of extra change, right? If you have a good year, you're not using the health care, that just continues to add on to the next year and the next year and the next year. And again, they are raising them, not every year, but the IRS does occasionally make an adjustment there. And the other thing that is important, much like a lot of other qualified plans, at 55, you can start putting in another $1,000. So it's a great opportunity. Again, what's our role as advisors is to help clients build up a bucket of money. In this case, it's a bucket of money that can pay for healthcare expenses. And, let's face it, right? That's the biggest expense in retirement.
And then from a business owner point of view, an employee can contribute pre-tax. An employer can then match that and or just set his limit, his or her limit. The one caveat is if you are an S Corp or LLC, you can't actually contribute to yourself pre-tax. You have to post-tax make a contribution, and then you can write it off. So it's the same outcome, but it's what's important is when people set up these plans, their first reaction is like, well, if I can't contribute to myself, what's the point? And that's not really how you should look at it. It's really holistically around healthcare plan costs and all that, which we'll dive into later. But in terms of contribution as an employer, you can match, and you can and employees can also contribute as well.
Yeah, and I think sort of the overarching theme here is when you use an HSA with them and you have employees, it's not just yourself. You're putting the onus, you're putting some skin in the game for them, in that if they are wise with their healthcare decisions, they have more money in their
And I have a very specific
right?
example
It's
about
huge.
that later. That with real
Okay.
numbers with us and our staff, and sort of what we've tried to do or plan
Okay,
on doing
good.
for sure. So what do you got for number 2?
Good. Yeah, number 2, earnings can be tax-free. So with an HSA, 65 is the magic age when suddenly all the qualifications sort of turn off. So before that, you obviously have to use it for certain qualified types of expenses. And the one that really sticks out to me is the fact that long-term care premiums, you can use your HSA money for that. So again, it's just one of those items, right? A tax-free withdrawal that can pay for that LTC. You can't do that with an FSA. You can't do that with pretty much anything else. But HSAs you can do that with.
Beautiful.
That's pretty cool.
I don't know shit about LTCs,
Yeah.
so let's go to number 3. I have no comment.
Easy enough. Well, one of the frustrating things, my wife and I used FSA for years, and that's the old 125, my cafeteria plan garbage. I mean, I shouldn't say garbage, right? But the scenario there is you have an expense and you have to get the reimbursement. You got to match those up within the certain time frame, right, to be able to get that reimbursement, and there's not a carryover, and it just gets a lot more complicated. And that's one of the neat things with an HSA is there is no use it or lose it. So as I mentioned before, you put in your $7,100 and maybe you only use $3,000 of it this year. Well, then there's $4,100 that's left for next year. And oh, wait a minute, I forgot to turn in a receipt. Well, you didn't just miss the boat. That's okay. It's 2 years later. You can still turn, as long as it hasn't been reimbursed before.
So for
there's some
younger
guideline
business
there.
owners, this is a great tool because you could, in your younger years, knock on wood, you're not using a lot of your money that you contribute for healthcare needs. That can just roll over until a later date when you may need to use it, and it's a good savings tool for all of us, really.
Yeah, that's absolutely. And like anything, right? Every situation is unique, right? Being young and healthy is great right up to the point where you have kids, and then you throw that all out the window for a few years. But there's a period of time there for everybody where, again, just like any investment, the earlier you start, the better off you are.
Spoiler alert, and I will talk about this later. I had an HSA and had a kid, and it was still better. So anyway, what's number 4?
Okay. Number 4, no RMD. I mean, there's really no other thing to say. It's just nice to know that if you built up some assets in this health savings account to be able to cover what is, as I said, most expensive piece of retirement for people. I think I read a report, and I'll put that in the show notes, like the expected healthcare cost for a person turning 65 in 2019 is now $285,000.
Expected over what period of time?
Most
What is
people
that?
for the retirement.
Okay. All
So
right.
from 65 till death, the average is 285. Think about this for a second. That's more than most people have saved for retirement, and that's just their health care cost. So yeah, no RMD. You don't have to worry about being forced to pull it out. It's there for you to use. Anyway, all right. So let's move on from those. I mean, I do want to get your take on the HSA pay component from a small business owner's perspective.
And most advisors are small business owners. So from that perspective, you
Right.
got to look at it as what the premium is. So family of 4, the premium was roughly about $1,800. And that was your PPO type plan with still had a deduction, $2,000 or whatever the deductible was. Still had copays, but it covered almost everything. HSA plan was roughly $1,100, $1,200 in that range. So the difference, $500 or $600, is since you're the owner, is what you're working with, right? So if that money can go into an HSA plan, it's just about math and where your deductibles lay. And so it was nerve-wracking when I did this because it's so hard to understand. And we knew we were having a baby, and I did the math. And even with a $6,000 family deductible, the money you save on the premiums outweighed anything you would pay on the deductible. And you reached the deductible, and I didn't reach a deductible even with the baby, but let's say you did. You're not going to have a baby every year. Well,
hold on, a timeout. I think I need to. Is there a yellow flag I can throw? Here's some yellow.
So the point is, as a business owner, that's number 1, right? Where are you in terms of the premium and how it affects your family? Next is your staff, right? So we pay 100% of the individual level. for all the staff at Potomac. So offering an HSA really is not attractive to them because they're already getting most of that covered. However, let's say costs get out of control and you have to offer an HSA. It can be at a lower monthly premium, and then you add a little bit to the employee in terms of a matching contribution. So it's a shared cost, and they also get to walk away with money in their HSA that can roll over as a retirement savings. So ultimately,
right,
for any owner, it really comes down to what you're paying in premiums, what your plan currently is. And I went through 500 different iterations of this, and the HSA won every single time. Because think about it. Let's say your plan is $500, $600 a month. It's very rare that you're going to use that amount of medical care on any given year. Yes, we're making a huge assumption that you're somewhat healthy and you don't require a ton of care. That's a huge assumption. If most people are in that bucket, how many people are actually using $500-$600 worth of medical care on a monthly basis?
Right. Well,
right? I mean, it's far and few between.
Right. Well, like I said, it is an assumption, but at the same time, it's just a matter of I guess one of the ways I look at it is when you're paying a regular healthcare premium, it's out the door. Right? We talked about the FSA, use it or lose it. Well, a regular healthcare premium is out the door. If you don't use it, it's just money gone. When you have the HSA and you're putting money in that and you don't use it, it's there for you next year.
It's there.
And the year after.
And that's the rollover. That's the effect there that helps.
And the point of being able to actually have it managed, right? Do some sort of an investment process associated with HSA
Well, here,
dollars.
I'm going to get to that.
Okay.
So that's the second part of the
hold
business
off
decision that's the second part of the business decision that I had to make. Where do you put this, right? Where do you put it? Your payroll provider may have a connection, which doesn't matter for the business owner, but for your staff, the payroll provider has connections with different banks, Avidia, Denevere, things like that. For me, what was important was the ability to manage those assets, to your point, right? I wanted this self-directed brokerage option so I could not just get 4 mutual funds, have the ability to manage those in a risk-managed factor. So I picked HSA Bank because they have a connection with TD Ameritrade. And more have been added. So there are now 6 banks out there that have a connection with TD Ameritrade. So you open the account with the HSA bank or whatever bank you want that has that connection, and then you transfer over a majority of your HSA that you don't need for current medical expenses. And then through that TD account, not only is Potomac able to manage it, but other advisors are able to sort of get in there and manage that account for their clients. And that's a huge benefit to have that set up.
Yeah, this is something that I think is critical. The fact that it's an SDBA, right, the self-directed brokerage option, is pretty cool because it's not, like you said, not restricted to just 3 or 4 choices. Yeah, you want to actually try and make it grow, but you're stuck in something that is going to go up. Let's face it, this is supposed to be money that you really shouldn't take a ton of risk with in the scheme of things because obviously you want to know that it's there. You don't want to see a catastrophic loss, a 40% decline in that bucket. Oh,
Jeff, that kind of stuff doesn't happen.
Yeah, right.
But no, you're nail on the head. I mean, listen, this is something that you're saving for your health, and it's probably not something you want to be aggressive with. I mean, that's our 2 cents for what it's worth. I mean, people can do what they want. But the self-directed option gives advisors the opportunity to offer strategies to their clients that completely destroy any of the bank options, which literally are, to their 5 or 10. They have the self-directed because they don't want to get involved in offering investment options. They just want to be an HSA bank.
Right.
That's it.
Right. What else do you have on as a small business owner? Any other details?
That's it. It's confusing. Start with the premiums, work your way backwards and, really focus in on where you want to put those assets once you get the HSA open.
All right. Well, easy enough. Again, the point is we try and bring unique ideas to grow and protect your business. And HSA is just one more of those ideas. So, right.
I just want to, real quick, before you get on, one of the clear reasons why advisors are ignoring this, and they are, because we talk to them all the time and they don't really look on this, is because of the account balances are low. And I understand that, but at the same time, they're great savings tools for small business owners, like we've talked about. And it could be something that's a niche for your practice. That's an up and coming, growing niche. Every new product starts with low account balances, and so we encourage all of our advisors to take a look at it. And we have some content as well that we'll put out that touches on the availability of this. And I heard a rumor that Fidelity, they did come out with an HSA earlier this year, their own version, and apparently, and this is not verified, that at the end of the year they're going to make it available to advisors. So that would be a combination of an HSA bank and self-directed. So you wouldn't have to link anything. They would just handle everything directly at Fidelity. So
nice.
Just another avenue and custodian for advisors that they're familiar with.
All right, so let's move on to recommendations.
So I have TSA PreCheck, which I didn't do for years. I just thought it was like, look, man, just stand in line like everyone else. Don't be that person. And I know, whatever.
I'm that person.
So I had TSA PreCheck, and I loved it, of course. But then the line started getting long. So I it's like, how do I avoid this now? So I signed up with Clear for a free trial. And it's awesome because not only do you go to the front of the line, then you go right to PreCheck. So you avoid the entire PreCheck line, and then you go right into PreCheck. Yes, so Clear.
How have I not heard of this?
Yeah, exactly. So Clear, it's not available at every airport. It's available at the ones I care about. And so you do like a 5-minute eye scan or whatever, and you get verified, and you walk right to the front, and someone goes to TSA with you and says he's clear, whatever, passenger, and then you go to the front of the TSA PreCheck. So it's like the greatest combination of laziness ever, and you don't have to wait for shit, and I love it.
Yeah. This is like having to pay extra for a slice of cheese. I mean, look, I've got TSA PreCheck, I've got Global Entry, and I got to pay for something else, right? I mean, I rarely have I ever seen a TSA line longer than 5 minutes for me.
Yeah, and that's the argument against not buying Clear until you run into a TSA line that's 20 minutes, and then you feel like you're back where you started. So anyway.
So I do know my wife recently traveled and saw that the TSA line was actually longer than the regular, but I just prefer not to have to take my stuff out. I'd rather wait a little bit longer and not have to mess with that. So I think it's easier.
Yeah, but listen, I solved it. I solved both problems, right? Clear, it's
True
a way
that.
to go. Hey, guess what? Hey, listen, it also works at stadiums. So there's some stadiums that have signed up.
No
so if
kidding.
there's like you go to a football game, there's a humongous line to get in. They have a Clear section. You're pre-verified, and you just walk right in.
How much is this? I'm in.
So anyway, how much is it? I signed up for the free trial. I think it was like, it hasn't expired yet. I think it's like $185 a year or something like that over 5 years, or $150 a year. I don't know.
All right. So as we move on to recommendations, this is...
Wait.
What?
When I saw your recommendation in the OneNote, I fell over laughing, by the way. So go ahead.
All right. I'm a huge hip-hop fan, okay? I love this stuff.
Keep a straight face.
Rap. My wife thinks I'm nuts. She questions a lot of things about me, but anyway, Hip-Hop Revolution, or Hip-Hop Evolution, excuse me. It's a 4-part series on Netflix. Definitely a binge watch for me. I just think it was totally cool to see beginning to end. I mean, where it started, what people were there, and you're frankly not old enough to remember this, but Blondie came out with Rapture when I was a kid back in the late 70s or whatever, and
I don't think I can continue this conversation. I'm gonna die. I'm gonna die laughing. You're grasping on to your youth as much as possible and your perceived hipness, but it's fading,
I'm old, white,
brother.
and bald. What can I do, man? So, anyway, I found it intriguing. I found it interesting. Totally loved it.
Oh my God, I'm crying. Okay. Oh wait, I have one more thing. I have one more thing before we end this. The entire podcast is absolutely pointless if we have Medicare for all.
True that.
We'll delete it.
I think you're right.
Fair? Right? Then there's nothing. We don't need anything to talk. There's nothing to talk about.
All right. So as we move on, I do want to make sure that I don't forget to do this. We have a new podcast page. It is on our website. It is live. And basically, if you have trouble sleeping, you need something to binge watch, hey, hop onto the podcast page. You can see all, 17, 18, I guess this is episode 18. You can see all of these. It's nice to have it all in one spot. Still have our blog page, and we have some blogs that are associated with extra info you can check out, but we do have a new podcast page. On that note, like, subscribe, use the Connect Us page to give us tips, ideas, comments, etc. And hopefully that will do the trick for you.
Hip Hop Evolution.
On that note,
see ya.
Ready? Peace!
Oh, good. God damn it.
Oh, you're killing me, Smalls.